in less than 2 innings. He walked 4. He gets the loss. Only Tiger runs coming in a 2-run bomb from Jake Rogers. That came early on. That was his team-leading 5th. Alex Fadel going today for Detroit at Comerica Park, 110. That's right here on 97.1 The Ticket. NBA playoffs Heat eliminate the Knicks in 6, 96-92. That's just the second 8th seed ever to make the conference finals. Lakers take down the Warriors in 6, 122-101. Stanley Cup playoffs. Florida eliminates Toronto in 5, winning 3-2 in OT. Las Vegas takes a 3-2 lead over Edmonton, 4-3. PGA Tour at Scotty Scheffler by 1 at the Byron Nelson at the midway point. USFL today. Ford Field the place, 12:30 to kickoff. Michigan Panthers against the Pittsburgh Maulers. At the Ticket Update desk, I'm Jeff Lesson. For more 97.1 The Ticket or Odyssey.com.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are packed in the show for the show for sure. I'm Harvey Freed. Alongside of me, the original, the best, Harry Glanz.
Good morning, everybody. Welcome. Listen, May, we're really rolling. We've got a great guest on. We've got our studio that's full. I can't wait to get this rolling, Harvey.
Let me introduce all the players here. We got Lisa Lawson, who brings in Nick Castile from Fine New Keys Realty. Good to see you, Nick. Good morning.
Thank you.
You're awesome, and thanks for doing the podcast with us the other day. This is going to be some real-time radio here. We got tons of sports, but first, we got to talk about winning the offer all morning long. The girl to the right of me, Becky Alley, top 1% of all originators in the United States. She knows a lot about getting you in that house. We know a lot about helping you get that offer won. We're going to talk all about it, and we're going to take your calls at 248-539-9797. And you guys want to jump in?
Hey, what's up, everyone? Before we forget, I want to make sure we give a shout out to all the mothers out there. Happy Mother's Day tomorrow, because they know how to turn a house into a home just like we do.
I love that. And you know what? And that's really what it's about. It's turning that house into a home. But first, Nick Castile, and we also have Lisa Lawson in the Google of Capital Mortgage Funding. Ask her a question. Takes her about 2 seconds to figure out the answer for you. So anyway, so Nick.
That's a good nickname or a bad nickname, really. But
Google, are you kidding me? What could be better than knowing everything? Yeah. I don't know. Maybe it's a bad thing to know everything, Harvey Freed. I mean, you don't like it when whatever. We won't go there. It's a family show.
It's a good thing.
It's a family show. Anyway, so Nick Castile, we've got to find people homes because inventory's still at record lows. Houses obviously going up in value with all the appreciation. Home prices are not. I want to let everybody know they're not coming down, and we are really we're in the middle of May. It's going to be a long summer, and people have to be prepared when they're shopping for that home.
Yep, correct. They're not only not coming down, but they're going the other way. Inventory is not only at record lows now, but it's getting lower. So we're seeing actually like week over week from last year to this year, about 20% less listings coming on the board, which just means inventory is getting lower. So you got to get your ducks in a row, guys.
I like that. Supply and demand have created serious competition, no doubt about that. The clients in today's market need to understand it's a whole new trend out there. We had a short window, maybe November, right around Thanksgiving to the beginning of January. Sure, maybe a short window where you could maybe make an offer right at asking, maybe a little over. Those days are gone. And we've got some interesting tips that we can help people with. I got a story from last Saturday's. Of course, I'm going to share a little bit of it. Last Saturday's open house I did. Really interesting. As half the families that came in, I felt like were really prepared, had it going on. The other half did not. Becky, still shocking to me, 2023 spring market, it's been going on really since the pandemic. The shortage of inventory, half of them didn't have real approvals. Half of them didn't have their money behind them, and they're just not prepared to win an offer.
Yeah, and a lot of that's really unfortunate because, when in this market, you can't see the house and then want to write the offer. You literally have to go in there with your guns blazing, ready to commit to that property should it be the one for you. And if you are like, let me see the house first, then I'm going to let you pull my credit. Well, once we pull your credit, we could find out that we have a lot of work to do because a lot of people we don't talk about it at Capital Mortgage Funding a lot because we do this every day and we protect our clients. But there's a lot that goes on behind the scenes before we can even issue a pre-approval. I do a lot of social media content on this type of stuff because you can't see the property, then then write the offer or then try to get pre-approved? Because what if your credit's not there? What if the property isn't something that you can afford? And now you've just wasted your agent's time, your time with hungry eyes on something that you can't even afford that payment. So you're walking around with this piece of paper and you now have a payment that you can afford.
Yeah, or even worse. I mean, sometimes we pull credit and there's an error on there. They didn't even know. They're like, oh, I'm a 760 FICO all day long. And then we pull it and I was like, and I explain what's on there. And they're like, that's not mine. And then we go through the whole rigmarole, or that's an error. And so now we can't make an offer because we can't get an approval until that's corrected. And even if we rush it, and even if we get the documentation, all of that takes time. You've got to call usually maybe the creditor that made the mistake, and we got to get a letter, and we got to send it to the bureaus and wait for a rescore. And in that time period, even if we rush it and it takes 5 days, that house is gone. You have to be ready in advance.
Yeah, so it used to be the order of things was the following. People would get in their car. They would drive around the neighborhood. They'd go there. They'd maybe see some for sale signs up. Then they'd call their mortgage person. Then they try to get their ducks in a row. Then we issue the letter. Then the realtor goes ahead, makes the offer, and it gets accepted or doesn't get accepted. No. The order now is as follows. Because there's such a scarcity of homes on the market, the realtors right now are doing pre-showings. They're saying this house will come on the market on a Thursday. So you have a rush of people now previewing the home on the outside. Then the house comes on the market. A ton of people go in, and then offers are made that day, that night, and then they'll accept offers, hold an open house on the weekend. And then on Monday or Tuesday, they'll go over all the offers that came from Thursday all the way through Sunday, Monday, and then they're going to pick the best one.
Or call for highest and best,
right?
Depending if they're too close.
Exactly.
How'd
I do, Nick?
Yep. Nailed it.
I'm
sitting over here
story.
like
That's
nodding
really
my
what's
head,
going
nodding
on.
my head. Yeah,
that's what's going on.
Yeah.
Nick, you have a situation, no names or anything, of course. We never do that, but you had an offer accepted. You're ready to go. You're ready to move forward because you got the confidence from the lender. You got the confidence from the buyer. And more importantly, the seller, the listing agent, they accepted your offer. Now you don't have time. You got 30 days to close. You can't start changing your lender at that point. And wait, you could, but you better not switch programs. That could be a no-no.
Yeah, correct. So listen, if you don't have all of your ducks lined up, however you want to say this, but if you don't know exactly how you're going to go in with this and then you want to change it halfway through, that means you have to open up the contract. And we actually had this exact situation happen 1 month ago where somebody said, oh, yeah, you can do it. All you have to do is just get a piece of paper signed by the other side. I said, yeah, like a contract? We're going to have to change it. And what that does is that opens it up. And if there is a backup in place, maybe 10 grand higher, maybe better terms, who knows exactly what. And that is a real thing in this market. We actually just got a backup that was on, we had a backup and we're just waiting just in case. And we actually just got that accepted last week. But right now I had 3 backups in place. This is like, we're there waiting in case somebody screws up. And let me tell you, opening up a contract like that opens you up. And then you could lose that house. You already spent money on inspection. You already spent money on appraisal. People don't have that kind of money to just throw away. And you lose the house. Imagine that.
Well, what you're saying too is like to the buyers that are out there listening is you write on the offer no matter what. Be a bona fide backup offer because people are getting their offers accepted and then things happen in their life and they are rescinding those offers or things are happening or the financing because they're walking around with these pre-approvals. We always talk about skipping down the street with these pre-approvals, these pieces of paper that really were never worth anything. And then the financing comes through or falls through. So then you work with the next lender in line, hopefully Capital Mortgage Funding, and then your offer can be accepted. I have 2 of them in my pipeline right now that we were the backup offer. I was like, always right, because you never know. And some of the conversations that I'm talking with these listing agents, I had the best conversation with one listing agent. We did a $22,000 appraisal guarantee, we are at asking. It wasn't over asking, but we are saying, this is what we're willing to do, etc. So the listing agent called me, asked me all the bullet points. Have you seen these financials? Have they been pre-approved? Do you have the automated system? Have you seen the assets that allow them to say, okay, I can put in, should the appraisal come in short, the down payment, the closing costs, the prepaids, plus the extra $22,000. And she wanted on separate letterhead for me to verify that. Now, that is an agent that is worth their salt and out there doing the best for their clients, just like you, Nick. You're having those conversations with the lenders to make sure that when you are on the selling side, you're protecting your sellers, but at the same time, I'm also and you're on the buyer side, you're making sure that your buyer's always shining in the best light. Whether we are the first offer or the second offer, we're going to be the last offer always.
248-539-9797. We got so much to share for you. We don't want to tell you all the bad stuff, just a lot of the good stuff. But today's marketplace does require what we're talking about here. And again, I'm going to share that little quick story here. I won't. We're up against a quick break here. I'll tell you what. We'll come back. Well, hopefully some of your calls, 248-539-9797. How to win that offer in today's tough market. We'll be right back. Alrighty, we are back here live in the studio. We are brought to you by Capital Mortgage Funding, of course, powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. Yes, Fairway is a national company, and we can do mortgages anywhere in the United States. We set up our clients for success. We got a lot to share with you today, maybe some helpful tips. All right, Harry, let's go there just a little bit. You always told me, Harvey, maybe people don't want to hear from you. It's your opinion, Harvey. That's fine and dandy. But here, we can't change the facts on things. We can't change the fact that an appraisal is done, for example, and from a professional appraisal, and then we get the comps. We've seen that recently where there might be some
That's starting
noise.
to go again. We always say that, listen, everybody's entitled to their own opinion, but not their own set of facts. So what happens is, in our industry, there's a lot of opinions thrown out there, but there's some factual basis that we have to go on. Everybody loves to rail on appraisals and everything, and they think they're Rembrandt when they're going out there, and God forbid you ever question appraisal on something. But however is that if you have comparable sales that you can present that show homes in the area have sold for what the asking price is, then chances are you're going to get a great appraisal. Okay, if you just think because you put in the brick pavers or the market's going crazy, or you got the cool deck out there, the Trex decking and everything. Listen, that's a lifestyle that you chose to put in the swimming pool, and Harvey will argue with me all day long. The swimming pools add value, and I'll tell you that some people don't like swimming pools, but those are lifestyle approaches. If you have a macked out basement, right? If you have a cool basement, but not everybody wants that. So the bottom line is that we can go ahead and we can rebut appraisals in a professional way, but we have to have the facts out there. And what's going on right now is because houses are selling for over ask, overbid, multiple bids, and $25,000, $30,000, $40,000 over, there's a chance, keyword, there's a chance that value might not come in on an appraisal. That doesn't mean you shouldn't buy the house. That doesn't mean the house is any worth it. It means you have to come up with more money. All right, that's what it means. You'll get the house, but you can't just say, hey, this is a bad appraisal. And we have several of those. But what we do is we try to go ahead and professionally rebut that value and present actual facts. Not just because somebody says, hey, you don't know what you're doing. I mean, come on, you have to show that.
There's a huge difference between price and value.
Right.
Yeah.
I was
Right.
gonna say, I want to bring Nick in. When you are having a buyer, make an offer on a property, are you pulling comps and saying, this is where this is coming in at? This, they want to offer 300, but there's nothing above 275. Do you kind of tee them up and say you may be having to come up with the difference? Do you let them know that?
I usually just flip a coin. And then,
Wow.
no.
But I mean, good agents
yeah, of
prep
course.
their clients.
You
Yeah,
gotta
we-
let them know up
Yeah,
front.
we always do. So,
They shouldn't be shocked.
we do a couple of things. Number one, we tell them if they like the house, first thing we do is we call the other agent and we find out if there's another offer in place, what's important to the seller, and do we have a timeline associated with it? What's going on with them? Because we need to know what's going on there. Second thing is we pull comparables to see what I see as the potential value there. Usually that's a range. Hey, this is what other houses of similar nature are selling for. Same neighborhood, same style, etc. If we can, if not, we make adjustments. And with our experience, I'm sure you guys have seen this before. You've all seen tons of appraisals. We make adjustments. And then the third thing is we run numbers to say, okay, what would this house look like for a monthly and out-of-pocket budget for you, right? So then from there, now we can make our thing and say, all right, this is what we can offer on this house. This is what it might be worth. This is what it might be worth to me. And then we can put together a package that makes sense for our
This is
buyer.
what we can guarantee because this is what my buyer's got to work with.
Sure.
And this is the limit. So you know,
Exactly.
and you ask, right?
Yeah.
Yeah,
All
it's not a square foot play. Okay, it's not a square footage play.
Right.
So if you have a 1,400 square foot house that's sold for X, and you have a 2,500 square foot house that's sold for Y, you can't go ahead and multiply
Correct.
the square foot or the price per square foot times the square footage and say that's what it's worth. You can't do it. It just doesn't work that way. There are adjustments that are made, and you have to really take a look at what comparable homes, as this of the subject, have sold in that neighborhood in close proximity, or at least reasonable proximity, within a mile
Yeah.
of the subject property.
And I want to touch on, so we have an appraisal, like, Harry and I, we've been working on one. And, we got the broker involved, and the broker looked at this appraisal because we're like, okay, the value came in a little bit light. So please supply me with additional comparables. The additional comparables were less than what the appraisal came in at.
Yeah, yeah.
Like, that's not a comp. You're
What
not
are
helping.
I'm like, what are we going to do with this? I'm like, come with me something better. But the listing agent was holding so much value on a listing that hadn't sold.
It's tough to argue
And it
when
was-
they're coming in less. When they're trying to get more and the sales came in
Yes.
less, how do I justify that? And
Right.
then the problem is that you'll get the email and the phone call. You ready? You guys don't know what you're doing. Okay,
Well,
great.
luckily,
Well, I don't know what I'm
but
doing.
in-
You sent me comparables that have sold for
Okay,
less.
But in that situation, we actually came to an agreement that the appraisal wasn't bad. Now we've renegotiated, but we had to have that talk, like, this is why, and we had to really break it down with them. And then once we were able to see that eye to eye between the buyers and sellers, we worked it out because we close loans at Capital Mortgage Funding, and if there is actual data that we can say, okay, hey, appraiser, you should have used the blue crayon instead of the red crayon, they're willing to look at that information.
All right, perhaps you need a little bit of extra money. We got some great news last week. You guys put it out there. MSHDA, Michigan State Housing Development Authority, offering $10,000 now for all the zip codes out there, which makes it really good. You could use that extra money because you could use that money to purchase the house. Now you got some extra money that you had saved up to make that over asking price. But let's go there, Nick, and I know Lisa wants to comment on there. You're not calling up the listing agent and talking to their sellers. That's not happening in today's market. The cry letter, or the letter that states, look, whatever it is, look, here's my situation in life. You should accept my offer, 15 or 20,000 less than your best offer. That's not happening either. So, Nick, it's competitive out there. Helpful tips, having clients truly approved. That's the way to go. You got to really break this down. It's not like I'm out there with a pre-approval from some lender in another state.
Yeah, that's absolutely right. And not only having them pre-approved, but having a team in place that can talk to them about what that pre-approval means for them on a out-of-pocket basis and on a monthly basis, so that if we need to make adjustments on the fly, and look, you got $100,000 saved up to buy the house, and your pre-approval says that you only need to bring $20,000 to the table. This is a real life scenario here, right? Guess what? Now we can change that offer a little bit. You bring the same $100,000 to the table. I can guarantee, I can take some seller costs off the table, which is sometimes better than an appraisal guarantee. I can cover an appraisal guarantee really big. I can cover maybe some things that come up in the inspection, still be within budget for my person. That's why this is a holistic thing. We need to know what's going on, the whole thing, and we need a team. We need to know, all right, what can we do for this? What can we do for that? And then we put together something that works for them on a buy side.
Right. I was going to say, I had a similar scenario about communication and knowing what's really needed. I had a client that we approved 20% down. They fell in love with this property. They knew they were going to have to go in over asking, and they knew it wasn't going to appraise. So we adjusted the we adjusted the approval to 10% down so they could make the guarantee, because they didn't have 20% plus closing plus extra for guarantee. They really just had their 20% closing. So we adjusted, kind of rolled with it. They actually got the bid. And we made the call to the agent saying this borrower is well qualified. Instead of putting 20% down, we're going to put less down so we can make the guarantee. And, you have to have that communication, because it doesn't mean that person has less money just because you see 10%.
Yeah, let me say this. You do not need 20% down to buy a house. Whether you're a first-time home buyer or a repeat buyer, you do not need 20% down, and you cannot start the conversation soon enough. Harvey just, brought us back with talking about, Midja announcing that they're now, announcing $10,000 for every zip code in Michigan, whether you're a repeat buyer or a first-time buyer. Now, if you're a repeat buyer, it's in specific areas that you're able to utilize that $10,000. But the state of Michigan, Capital Mortgage Funding, we understand one of the biggest barriers of home ownership is the down payment. It's not the payment. It's not these interest rates. Everyone's like, oh my gosh, the interest rates are so high. No, they're not. If you can afford that $2,500 rent payment, you can afford this $2,500 mortgage payment and invest in yourself. But we're here to find the creative solutions between the lending and the offer to make sure that these offers are standing out in the best light.
Well, Becky, you sent out the article to me, and I like it. The country has like a debt ceiling meeting. They've been working on it. That's coming due. I'll tell you, I don't think the country is going to default, but it's a little scary out there because you could quickly see interest rates move up 1 or 2% in a short window.
If it happens. But the United States has never defaulted.
I feel like we've been talking about it for so long. We've been talking about the defaulting on the national debt forever. The reality is that
they always move it.
We've been reactionary for way too long over the last 3 years. If someone talks about any kind of stock, it's going up or down, depending on if they said and or but, right? It just depends on what people are saying and how someone is perceiving that information. The reality is that the best time to buy is when it works for you. But I appreciate that article because you have to be aware of what's happening nationally, because we are a national lender, but obviously locally and all that stuff. It's just about what you can afford and how it works for you.
Well, the much awaited May 10th the Consumer Price Index came out, and of course, it's always up for interpretation. Initially, the markets reacted positively, but then they really took a look at it and said, really, what happened? Nothing really happened. Okay, CPI the inflation factor went from a 5% down to a 4.9. Okay, big deal. Some economists even commented that the Fed could start cutting rates. It's probably not going to happen until the fall. Inflation is a real thing. If you take a look at it, if you take a look at the shelter numbers, the rent numbers are the highest they've ever been. Rent's the highest it's ever been. So with that in mind, inflation's still here, and all you have to do is go to the grocery store and take a look at what a loaf of bread costs. Not that I don't go to the grocery store, but I'm just saying it's a lot of money. What's going on?
The only guy who doesn't shop at a grocery, your wife handles that, Harry. Someone handles that for you.
Don't say that.
Someone handles it for you.
That's not true.
Hey, Harry, the mortgage headlines on May 4th were lowest rates, and I'm going to back you up on this, lowest rates in weeks. That was May 4th.
Okay,
May 8th headlines, noticeably higher interest.
Right.
Yeah.
So what really is going on now is that we've had 10 rate hikes since March of 2022. Inflation numbers are coming down, but they're coming down slower than everybody thought. Housing inventory is still very low. Demand is very high.
Right.
And prices of houses are not coming down, and interest rates are not going down fast as you want them to go down. It's not happening. When will they start going down? Probably the end of 2023. And of course, going into an election year of 2024 and all of 2024. But you're going to ask me, Harry, so what are rates going to be in 2024? Nobody knows that. I can tell you this, they're not going to be 3%.
No.
They're never going back to where they were. That was a once-in-a-lifetime opportunity. You had the pandemic. You had a lot of things going on at that point in time. But don't get used to 3%. I mean, if you're buying a house, the normal rates are, I would say if you get to 5% or 5.5%, I think you're doing well. So there's nothing wrong with current rates at 6.5%.
Right. They're not high.
They're not high.
The higher interest rates actually have been our friend for some time because it has eliminated some competition. You're talking if you have 900,000 homes on the market total nationally, and half of them are under contract, then you have 35 million between 24 and 34 that are entering the buyer's pool. You have this, everyone is fighting over the same select few houses. So the little bit of that higher interest rate has made it where you can get into the home and you don't have to pay as much. I still have offers that are getting concessions, right? And that's the key. And people need to understand that, because the ones that did take advantage of the lower interest rates, they're bragging, yes, hey, everyone, I got 3%, but they're not bragging that they paid $100,000 over the ask.
Right.
Yeah.
They're not bragging about that. You don't hear that part.
Yeah, but if you get into the market right now and you buy a house, just say in 2023, and there's still that lack of housing in 24, 25, and 26, your house is going to appreciate. So you're going to have that gain on equity. So if you get in the market now, it's a good time. But remember, we always say you have to be able to afford it.
Yeah, 3% on your 95% is huge.
Totally.
Yeah.
248-539-9797. We're up against a quick break here, but if you're buying or selling a house, please come back and join us. All righty, we are back. Brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation. You can reach us at 1-800-LOW-RATE, the best mortgage banker. We do mortgages everywhere. You might be cruising up north in a couple weeks. Yep, you'll be calling us as soon as you get back from Memorial Day weekend saying, I'm buying that vacation home. We handle all that, second homes, vacation home, investment property. Be sure to turn up the radio. We've got lots to share with you. And thank God it's a full studio here. Otherwise, Harry, we would have heard page 3, which is all about my open house and some real estate agent that
Did you
might
bring
not be in
cookies to
touch.
that open house, Harvey?
No, I didn't.
Like the old days, 1989, bringing in cookies.
Brought a handful of water to you. And again, if you are a minimum down buyer, get a better team together because Becky said it. We're making the calls immediately. So Sunday's my day. I am ready to call all of the listing agents on all of my approved buyers, not pre-approved. Pre-approved is rookie town. approved buyers. They're ready
Yeah.
to go in 30 days. We've already run the file. We just need appraisal, title work, and a few updated documents. You can close. That's the confidence a listing agent needs.
This isn't your mother, father, grandma Allie's market anymore, home buying market. It's a lot different now. It's not you just don't drive neighborhoods and wait around and make offers like that, Becky. I mean, listen to your grandma who is a sage. She knows that 18%, 17% interest rates happen because we lived it, right?
Yeah.
It's a different market. You have to attack things differently now.
You have to be prepared. And, during the break, we were talking about, and right before we took the break, we were talking about housing values, appreciation. We were talking about the interest rates. And the reality is this, is that you buying a home right now is setting you up for success, because I have the chart right here, the last 40 years, to show that we have been in an appreciating market in our nation's history all but 3 times. And if you buy this house today at a slightly higher interest rate, that same house is going to be worth more a year from now, 2 years from now. So when these rates do naturally progress down, as they will, they're not going to come down as fast as we want them to, but we will see a little bit of a pullback. You're now in a position to refinance your home at a positive equity position, eliminate PMI possibly, take equity out to replace your funds that you use to renovate the property. A thing that, as far as that goes, with new construction, you have new construction homes and no one allocates the funds for the sod, the landscaping. And right now, new construction, your price point is a moving target sometimes, because these builders, the materials are changing. And now here you are, you close on this house, and now you have raked dirt in your front lawn. And now where is that going to come from? Where's your sod coming from? Where's those funds
Sprinklers and
happening?
everything else,
Yes. And the reason why I bring this up is I have a client of mine. They bought a new construction. We were stepping in doing the end loan, and they just got the house finished, done, and they want to sell it because the payment and all the extra costs associated with that new construction home has put them out of their budget. So now they want to sell it and actually right size, because they bit off a little bit more that they can chew when they bought this house in 21.
So I just got a contract that there's an addendum on this new construction that says, based on the materials, that they have the right to assess an additional fee, because of inflation. So I'm like, you're signing this purchase agreement to close on a house next February, and you don't even know what the price is going to be then. Yeah. It's very difficult as a lender to kind of accommodate that as well.
Builders' contracts are really scary.
They are very scary.
Really scary.
And then, a lot of times, not all builders, but a lot of builders shift what are typical seller's cost to the buyer. Things like transfer tax and an owner's policy that are normally paid for by the seller. In these contracts, they're having the buyer pay for it because they can. Because it's hard to get a house right now.
Well said, Lisa. A lot of those costs are, again, picked up or already built in the purchase price. So, again, reach out to these great builders out there. We had a builder that was only offering 20% down and this type of thing. And our family sat down with them and they made a deal. They said, look, what if we give you 10% down? It's $50,000 and I'll see you at the closing table. We're able to do the end loan for them and show them some success. So there's a lot of exciting things out there. 248-539-9797. Eric, we can go to that call if it's up. Nope, he's just going to take that call. We're going to get them ready to go here. And again, we'd like to hear from you about all that. Hey, Becky, we got something else going on. You mentioned all these 27, 34-year-olds. They might be carrying some student loan debt. And that's something that has really been out there where they didn't have to make payments due to the pandemic situation. We charge, and really what the guidelines state is 0.5% of that. So, for example, it's 0.5% of whatever your loans are. If it's $50,000,
slow that,
you owe.
slow that down. Slow that down. Break it down slowly so people understand. We're talking mortgage nerd talk here. Let's break it down so everybody understands
Lisa.
what we're talking about.
So that's with loans that are for Freddie Mac and FHA. It's 0.5% of the balance. So if you have a $10,000 loan, back in the day it would be 1%, would be like $100 would be considered in your debt to income ratio. And if you're going with Fannie Mae, that is still the case. But Freddie Mac and FHA say it's 0.5%. So now we only have to put $50 into that debt to income ratio. So it's that percentage is based off the total balance of the loans that you owe.
Even if you're not paying on them now, that's
Correct.
a debt-to-income ratio situation.
We have to count that
Everyone
against
with
you.
student loans, just give us a call.
It's
free
only if
information.
you're not paying on them now. Because
Yeah, right.
FHA, it's always going to be the case. But if you're going with Freddie Mac and say you're in a income-based payment arrangement, you actually get to use the income-based payment arrangement amount.
All right.
Then it actually can be zero. But that isn't the same as deferment or forbearance. Right. It has to be your income-based repayment amount.
All right, we're reaching out to 43 million of you out there for sure. 248-539-9797. We got a call. Good morning, Nick. Thank you for calling in. Go ahead.
Now I get why they call me Google.
Hey guys, how you doing this morning?
Good morning.
Good morning, Nick.
I'm doing well. So, I'm a younger man. I'm looking to buy my first home coming up soon here. And, everybody talks about mortgages. And, I used to be a mortgage banker. I'm in the construction industry, so I have a pretty good understanding of property values. And, we're in the highest market we've ever been in, realistically. And I think mortgages are for suckers. Personally, I think they're created.
Say what?
By,
Hey, I'm going to let you stay on the
no,
line.
to go ahead and put debt on us so that we can keep paying interest on higher amounts than really what the home is worth, because the banks tell us they're worth that. And I think really it's a dream that's been sold to people based on false premises. Because there's no way anyone can sit here and predict that property values are going to continually go up for the next 40 years, because we're basing that on the past. And it's, you look at it, and why are some people paying $450,000 for a house that realistically is worth $200,000? Well, banks need to find a way to keep making money off of us with interest.
Hey, Nick, I have a question for you. So you're a builder now?
Yeah.
So is everybody that you're selling a house coming in with cash?
Well, I don't sell houses.
No, I didn't say that. You're a builder. So all the houses that you're
houses. I replaced the stuff that's gone wrong with shoddy building to begin with.
Right.
With these $600,000 mini mansions that
Right.
fall apart in 15
okay.
years.
So that's a different story. But do you think that you're the brethren that are building houses? Do you think that they're all building these houses? Whether forget the quality of the house, do you think all the buyers are paying cash for those houses?
No, but the
Okay.
actual meaning of mortgage in Latin, right? It means death contract.
Okay, so Nick, so here's the story. So the problem is that what you're saying is you think everybody should pay cash, and if they can pay cash, fine. If they don't have to pay
what I'm
interest, fine
saying
too.
is-
And then also, and I'm not going to argue with you, the interest rates that they're paying. Would you do this deal if I came to you and I said, Nick, I need $100,000. Will you lend it to me at 3%? Would you do that deal? As an investor? No way. Why would you do that deal? Why would you give somebody $100,000 and they don't, and you pay them 3%? I mean, that's a bad deal
Right,
for
but
lenders.
see,
That's a
realtors
bad
and
deal for
mortgage
lenders.
companies are going to tell you that you need a house. You need to buy this, and you
No,
need to
I
buy it.
don't know.
For this
I think we're
much.
You're
losing.
going to be
No.
fixing
I like
tanks
it.
pretty
Realistically,
soon.
the houses aren't worth that much, man.
You got to live. You
The
got to live
banks have
somewhere.
nothing to do with the pricing of a house at
Yeah.
all. The
It's a
banks are
free
not
market.
saying
It's a free market
Well, they
industry.
raise the mortgages. They continually control the price.
the
No, we
of
don't.
mortgages, right?
We
And
don't.
they
Absolutely
wanna
not.
The
buy
alternative is
mortgages.
everyone buys with cash, and the fact of the matter
Yeah.
is everyone doesn't
Can't.
have
Yeah.
cash.
Yeah.
Nor
not how it
if
works.
they had cash, they always choose where to put their cash, right? So
Well,
where
right,
is the
banks
best
and
place
the
to put your
real estate
cash?
industry get together and they essentially control the market.
Nah.
They
No, I can't. You
wrong.
can't control.
What they
If,
lend us for
okay,
the
let,
mortgage.
Yeah, it's
let me
okay.
just say this, Nick. You can't control if I want to buy a house for $400,000 and it was listed for $350, and I want to come in because I want to win.
It's my
That's me
option.
making that
Yeah,
decision,
it's
not
my
the lender.
option.
No outside parties.
Yeah.
In fact,
That
the
was
lender's
me.
probably going to say we can't give you a mortgage
Correct,
for that
because
amount.
if the
Yeah.
house doesn't appraise, we do our loans based off value, not price.
And we have nothing to do with the appraisal because the HVCC code of
wait.
conduct dictates
You're
that.
good.
It's not even us.
Lise, the cars outside, we're in the auto. Are we in the Motor City here? Aren't half the cars financed? And again, there was an opportunity
Half.
there
More.
where
More than
cars were
half.
financed at 0%. Cars were financed at 1.9%. We've seen Fed funds rate go up. Now we see cars doubling and tripling because, right, that's the way the economy is right now. So you need to decide if that Ford F-150 or that great Ram truck you're going to get, if that fits your budget. It's your choice.
Yeah.
I'm just going to say that when he pulls up to a construction site, all those beautiful looking pickups outside are all financed. And if they're not, the guys paid them off, or maybe they had enough cash. Great. Maybe their next one's financed.
Look at
Maybe
these
use that for a
mortgages
down
for
payment.
suckers.
I love
What does
that.
he think
Just
about
so you know,
renting?
I would love to have.
I don't mean to be rude, but I mean, if
I'd
mortgages
love-
are for suckers, what's renting? You're just throwing money away.
Yeah, I'd love to have this conversation in person with them. We don't have time, and I appreciate the call, but it's just wrong. I mean, it's just you can't.
It
you
was
know,
silly
again,
talk. It was silly.
Yeah, again, you can have your own opinion, but you can't have your own facts.
Yeah.
and that's what that is. So I respect his
Especially
opinion.
when we're looking at the
But he's
housing,
wrong.
there is history, right? You're looking
Right.
at, you can see clearly when we have been in an appreciating market in the housing market from 1942 to 2022,
Yeah.
and there is very minuscule blips in the radar when you saw people lose
Yeah.
equity in the home. Obviously, the housing crisis was one of them, and as soon as we came out of that in 2012, Everyone saw a 6% appreciation in 2012, and in 2013 there was an 11%.
There's
And
a reason
you're
why
gonna
Warren
see that
Buffett
going up.
Well,
You're-
there's a
Math is
reason
math.
Warren Buffett is the richest man on earth, and also why he is a real estate.
Millionaires are made in
real
a
estate.
down market.
He
Well,
owns Berkshire Hathaway.
Yeah.
He is. Yeah, you didn't know
Well,
that?
actually,
knows what he's doing.
roughly 1/3 of homes are owned free and clear,
Yes.
and the equity in homes right now is the highest it ever
Yeah,
has.
it's an
Yeah,
average.
which is awesome.
Yeah.
It's an average of $122,000 over the last 10
Or
years.
less than 42% of the equity is utilized. That means that you are in a surplus of invisible money, right? So if someone were to set up a stack of $200,000 on a table next to you, are you going to say that's not real money? Of course it is.
Yeah.
People are sitting on equity in that. Now it's realized when you pull it out, just like your stocks, right?
Yep.
You can see your stocks go up to the moon, but until you pull that out, it's unrealized gains. That's what
Well,
we're talking about.
When the average age of a first-time home buyer, as we said, is 34 years old. Okay, that means there's 27-year-olds and 41-year-olds buying houses, so that age range. You can't argue that, and it's supply and demand. So whoever's out there listening, it's what somebody's willing to pay for the house, and if they want to overpay, if they want to underpay, it just depends on what the buyer and seller agree to. So
All right, we're going to get this train back on its tracks for sure. 248-539-9797.
Let's
We'll be
argue.
right back. All righty. We are back. It is the Hardcore Mortgage Real Estate Business Show, again, brought to you by Cap One Mortgage Funding in our 23rd year, bringing you great information. We love sharing it with you. If you've got a crazy call, we'd love to hear from you. If you would rather live outside in a tent or something, that's also accommodating. And, hey, I don't mind, Harry. When I get real old, I'm getting one of those 25 to 45 foot, totally trailers. I'm headed out. I'm going to go to Yellowstone. I'm going to do the whole thing. And that's a cool lifestyle, too. But on the other hand, most of the renters out there, they're looking to own. They're looking to own because rents are through the roof. We've already explained that the facts are the facts. They want home ownership. They want to have a tax write-off. They want to have a roof over their head. They want to build community. There's a lifestyle about owning a house. There's no conspiracy theory here, okay? We're not storming the White House next week. So we'll take your calls. I'll be careful what I said.
You better be careful
Hey,
with that.
Jim.
I'm going to get a letter now.
You will.
An email.
248-539-9797. We'll take all those crazy calls, too, and good calls. Jim, you're calling in about your daughter's situation. Let's hear about it.
Yeah, okay. So, make a long story short, she bought a house over a year and a half ago, almost 2 years, in city of St. Clair Shores. Single, doing everything on her own, making her payment. Beginning of the month, her payment was $1,059. Beginning of the month, they drained her account, and her payment went up $450 due to an escrow shortage. Mm-hmm. And everybody I've talked to, $450 is absolutely ridiculous.
No, not necessarily.
So the mortgage company's they said it could take 10 days. They're doing an investigation to find out what happened, yada, yada, yada. Is there anything that she can do? She's not going to be able to afford to stay there, with a $450.
That shortage is probably, or that difference, that $450 is actually most likely double the shortage amount.
Yep.
Because in Michigan, we pay taxes in advance. So when a shortage happens, your escrow company or your mortgage company is still paying the bill. Then they charge you for the shortage that happened because now there's not money in the account, but they know the bill is coming up. She's going to have another summer bill July 1st. It's right around the corner. So they take that shortage and they double it so it doesn't happen again. So most likely, if it says $450, the shortage was most likely only $225. But because it happened and they have to make back for the already not paid enough, right? And make sure there's enough for the January or the July 1 bill and the December 1 bill coming up, they add that extra. So most likely, I'm guessing in a year, it will fall back down. But the way to fix that, and I don't know what her rate is, if feasible and it makes sense, refinancing could reset the escrow account.
Also, they could do a modification too, and we see this all the time where the lender is willing to work with people. We're not. It's not crazy.
So what they
land
can do
out
is
there,
you pay half of the amount,
Right.
like half of the shortage,
Yeah.
and then maybe the payment only goes up to $225.
Yeah, there's always that option
Yes.
where when the escrow account was reassessed and they identified that, naturally in Michigan, for that first year, you pay what the previous owner's tax rate was, and it becomes uncapped. They reassess it 2 times a year, in November for the projected winter, and they do it in May for the projected following summer bill, because obviously we're trying to keep up with the taxes, but with the housing market, the increases, we couldn't control what taxes are going to do. We don't control the taxes, right? But in that situation, you should have a few options where either you can pay the escrow shortage in a lump sum, or they break it down in a per month basis. But obviously, you want to reach out to that servicer. We can call you after the show to kind of help with that in some regard, to maybe give you guys some tips and tricks on how we can get that reassessed quickly for you.
It's not catastrophe. Jim, I got one question for you. Your daughter did the right thing. She's a homeowner. Congratulations. You taught her well. Jim, is the house worth more now than it was a year and a half ago? Yes or no?
Yes.
Yes, it is.
Okay.
By about 10,000. So the 4,000 shortage, let's call it 4,800 shortage, $400 a month, somewhere in that ballpark. It's not even that high, as we just explained. We're sitting on another $10,000 to $15,000 in equity. Jim, get her through this little situation. Have her call us. We'll call you off the air, and we'll figure out a solution. So we'll have a great ending to the story.
Yeah.
And she could go to the city of St. Clair Shores too. Yeah. The city of St. Clair Shores, and ask them to reevaluate and reassess and explain the situation. They will sometimes, lower your tax.
Chances are that servicer laid out money, fronted money
Right.
for her.
Correct. That's what I'm saying. You're going to have to make it up. That's what
Yeah.
I'm saying. You're half and half best. The half and half is probably your best bet, but
And
there's
maybe-
ways to deal with it.
And maybe the lender didn't set up the escrow account properly. That we see that sometimes
that's
from
true.
other lenders across the United States. We're
That's
not-
exactly. I got to be careful.
Jim's hot.
Kind of a family friend that put her through this mortgage, and I'm kind of that's what I was. You guys dragged it out of me. That's exactly what.
Well, we'll figure it out for you. We'll call you off the air. We'll go over everything for you, and then we'll go ahead and help you with the situation and explain it, because what you're going to need is you want it explained properly to you by an independent third party. We can be very objective on it and let you know what's going on. So we'll just have to do that, Becky.
Yep, and that's a key part of the conversation that we're having with our buyers is these are the taxes of the property right now.
Yep.
But in a year from now, these are going to be the projected taxes, because it's all about affordability and making sure that we are setting you up now. But in the future, raise your gaze. We're looking 5 years down the road.
Yeah.
We are doing our best to project what the taxes might be. So if your taxes are $3,000, we're running the scenario and saying, hey,
they're not going to be $3,000.
There's a good chance that your payment a year from now could be $300 more. Are you comfortable with that?
Yeah.
And it's there's an actual formula. You take the sales price, divide it in half, times the homestead millage rate if it's your primary residence. That is what your projected tax amount is. There's a calculator on the state of Michigan website, and it says SEV. What are you going to pay for the house? You can know this information up front.
This is one of the first things we do when we're putting together an offer. Always. So when we break down the cost that it's going to cost you right now, out of pockets, cash to close, what your monthly mortgage payment's going to be, and what it's going to be today, and what it's going to be approximately a year from now. It's a guess because we don't know, taxes go up, etc. But we know what the automatic adjustment's going to be. And Lisa, you just told me off air this story about, it's the example that I hear 1,000 times, right? The taxable value right now is 70. It's going up to 130. And the fact of the matter is, when you don't have professionals working for you, here's what happens. They never tell you that it's going to go up $500.
Right.
They never tell you that. But this is like a given. And that adjustment, that big adjustment only happens realistically one time. I know it happens in 2 stages, but realistically it happens one time. So you can plan for it when you buy the house.
Absolutely.
That's Nick
Not
Castillo,
when you buy,
Fine New
not at a
Keys
purchase,
Realty.
there's no cap.
Yeah.
When you purchase, that cap is taken off. The minute it transfers ownership.
I get that part. But what I'm saying is they can't you're not going to see a 20%, increase in some of these cases, as far as for the next 10 years, right?
No,
I'm saying.
That's
That's
what
what I'm
own
saying.
it. It's
One
capped.
time when it
The majority of
resets.
it, yes, correct.
With
the
the
majority
new
of it
ownership.
is, it's
Right.
not going to
New
be just
ownership.
on this ascending crescendo from now until the end of time.
It
the
can't.
taxes do eventually stay where they're going to be,
No,
and then come back down.
it gets capped at the time you buy it. They're going to make this one big adjustment within that year and a half. But the new owner, it is capped. That's right. It can only go up a certain percent.
And to be clear, it's not always a big adjustment.
No, not
If that
always.
house was just sold a year ago,
Probably no big deal.
Yeah, it's probably not a big deal at all. It's probably not even an adjustment very much that you'll even notice. But what happens is what we're seeing a lot now is, guess what? These houses have been lived in for 20, 30, 40 years.
Yeah.
That rate has been capped for 40 years.
Right.
So now you're looking at it and you're like, wow.
Or like
taxes
someone who buys
are-
my mom's house.
Yeah, taxes-
1973, 50 years. And everyone's like, oh, the taxes are so low. And I was like, they're low right now. But whoever buys that house, my mom bought it in around $40,000. And it's worth $350 now. Those people are going to get a rude awakening.
Let me sneak in a little bit. Cash out refinances. We see them coming. And again, prepare yourself for a refinance in the future. We've talked about it all year and for the last 3 years. If you happen to be in a situation where your rate's a little bit higher now, you're coming in with less than 20%, you've got PMI to look for to getting rid of. Maybe you've got an FHA mortgage now that has MIP, mortgage insurance premium. You can get rid of that and get a lower interest rate. How about this? As we had that crazier call earlier, you don't need a 30-year mortgage where the banks are going to rip you. You can get a 15-year mortgage. You can pay your mortgage as if it's a 10-year, Becky Alley. You can amortize your loan differently. You can have your loan paid off at any time you want. There's no prepayment penalty. So, yeah, if you get into the house and you borrow it and it goes up in value, now you're sitting on a bunch of equity. These are all very good things. Harry?
No, I agree with that, Harvey. I think that anybody who thinks that right this second that their house is going down in value, that's not true. You can go ahead and you have to do the math. If you're sitting on debt, remember, credit card interest went up from 17, 18% to now 21, 22% as the Fed raised rates on everything. Consumer debt is going crazy right now. Car payments are actually the highest they've ever been. 17% of people out there that have car loans, Nick, are paying over $1,000 a month. That's insane. Okay. So that it is what it is. Those are the facts again. But also what you can do is your home's appreciated, average equity is $122,000 over the last decade. You could go ahead, not advocating using your house as a piggy bank, but I'd rather have you pay 0 credit card interest and a little higher mortgage interest, because those rates are going up. If you're on a fixed rate mortgage, that rate is never going to go up. And what is deductible? Car interest isn't deductible.
Credit card
Mortgage
interest, isn't either.
credit cards not deductible. Mortgage interest is deductible.
Yeah, that's why people get in trouble with this credit card thing, because who can keep up with 30% interest? Like 5
That's
investors
crazy.
in the entire world, right?
Crazy.
But like for the most part, most of us can't keep up with 30% interest. Your job, you're not going to be making 30% more next year.
No.
Yeah.
Right? Like, so you need to do something that makes sense.
That's really the talk
Yeah.
people should be talking about. What credit card companies are charging. Okay. Everybody yells at us because we're charging 6.5%. They charge 22% and sometimes more.
All right, if you want to hear the facts, you can call Capital Mortgage Funding all week long at 1-800-LOW-RATE, the best mortgage banker right here in Michigan. We'll set you up with the greatest mortgage. We'll set you up with great real estate agents like Nick Castile from Fine New Keys Realty. Nick, always thanks for joining us.
Oh, yeah. Thanks for having me. Always a pleasure. We get into it, man. We get heated. I love it.
We could do another couple hours, but we're going to have sports following us up. We got Tiger baseball. There's a lot to talk about. Keep it here on 97.1 The Ticket. We'll see you next Saturday.